Okay. Ray, can you hear me? Welcome, everyone. 6:30 p.m. Today is Thursday, July 30th. Today we're going to be talking about homeowner insurance coverage and what that means to you as a homeowner and what it covers. And there's going to be a lot of small things and big things that we might learn today that we otherwise didn't know about the insurance business and our owner's policy. So today we have Ray Chavez from Farmers Insurance, and we're having him on just because he has a wealth of knowledge when it comes to insurance. He does a lot of policies, and he's going to teach us a few things. So Ray, welcome. Thanks for joining us today.
Sure, thanks for having me on. Thank you.
Of course, my pleasure. It's always good to be on here with you. So let's I wanted, right now we're having a conversation about COVID and how that's affecting the insurance business and different things that are coming up. Maybe just questions now, hypotheticals, but I'm sure down the road there's probably going to be case law on some of these things as far as lawsuits because of COVID and how it's affecting people infecting each other or whatever, right? So we'll get into that in a bit, but first and foremost, let's talk about a general homeowners policy, right? General homeowners policy. Let's talk about some things that it does and does not cover. So maybe we could just do like a little speed round where, Ray, you just tell us what a homeowners policy usually covers for standard homeowner.
Well, the standard homeowner, we'll call it an HO3 at single family residence, which covers the dwelling, separate structures, covers loss of use, liability. We also add extended replacement coverage. There's some policies that cover theft. The majority of the HO3s cover theft. For example, it's important to know what type of policy you have, because that could be something that could be excluded. We also cover your contents. But that's also really important to know that there are limitations to your personal belongings, like that jewelry, for example. So those are basic coverages that an HO3 policy will cover.
Okay.
For a single family residence, but different than a condo policy. Go ahead.
Oh, okay, different than a condo. Okay, so let's talk about single family house then. So what's the things that it does cover that most homeowners know that it covers, or believe that it covers? So fire, water damage,
limited water damage. It's very specific, limited, because if it's sudden and unexpected, I've seen that that's covered. But if it's something that's ongoing, and an adjuster goes out there and knows that, hey, there's been a pinhole leak underneath your kitchen sink for months, and you didn't know about it, now you know about it, that might be something that might not be covered. So water damage is really delicate.
So fire, water, and then you said sudden water loss. So what's a sudden water loss? Is it like you go on vacation, you come back and your home is flooded because a pipe bursted? Is that covered?
That's sudden, unexpected. Toilet overflows, a bathtub, that's sudden, unexpected. It's raining, lots of wind, and we had that type of rain. Last year, I think it was, where it was raining pretty hard. So if the roof is in good condition and it blows off some shingles, now water comes in, or if it breaks a window, water comes in, something like that, it's covered. But we have to be careful, because 95% of roof claims, from what I know with talking to adjusters, aren't covered because it's normally a wear and tear. So we have to be able to understand that that sudden and unexpected is what it says. Wear and tear is something else, or ongoing.
Yeah, because that's just general maintenance that the homeowner has to maintain the property, right? So
Correct.
so the key term is sudden and unexpected.
Correct.
Okay, cool. What are some things that most homeowners think that they're covered for, but they're not?
Earth movement.
Okay.
Earth movement. That's huge. Um, we all know it as earthquake, right? But you know, on the policy, it's considered earth movement, and that's something that, you know, if there's a because it could be earth movement could not be an earthquake, for example. You know, it's just maybe there's a mudslide that where your home is here, and then there's a hill, but you're close to it, and now, you know, the hill collapses. That's considered earth movement. Something like that isn't considered. I had a couple clients today that they purchased an earthquake policy, and they've had the policy for years. They were with another agent. It got transferred over to us. And for years, they thought that earthquake, earth movement was covered in it, and it's not. It's not. It's a separate policy.
How much is a normal policy for earth movement policy?
Yeah, I like that word, earth movement. It's a good one, right? For it depends, because keep in mind that those are we're kind of like the middleman. Those are done through California Earthquake Authority. So California Earthquake Authority, they also deem high hazard areas. You know, I didn't know that until, you know, a couple years back, to tell you the truth, a few years back. And so it just depends on the location and the amount. Today, without naming any names, I mean, I did a policy. Their coverage was like at 230,000. It's a small house here in San Diego, and it was only 100 and what was it, $166 for the year with the 5% deductible. But then the other day I sold one with a like almost $300,000 coverage, and the policy was $300. So it just depends on the coverage amount, location, you know, zip code, and whatnot.
So basically, you could get you're the middleman. So I remember now. So there's only one company in California that actually provides earth movement coverage, and it's like the state of California, basically.
California Earthquake Authority. And I want to remember that there are companies, private companies that offer the earthquake, but that's more on the commercial side. But remember that the earthquake policy goes hand in hand with your fire policy. So you wouldn't be able to purchase, like if you have your fire policy with us, you wouldn't be able to go to State Farm and purchase your fire policy with them. It has to be with the same carrier.
So same carrier provides both policies. Okay, cool. And it doesn't sound like it's that expensive for anyone. Okay, cool. A lot of us realtors, when we sell a home, we know that the buyers are going to probably escrow their homeowner's policy. So is there just one policy, let's say like the HO3 for single family homes? Is there just one policy that's given, or should the buyer of the home call in and say, hey, what type of different policies do you offer?
When I first started in the business, we used to, and they're still around. There's a lot of policies that are still around. Actually, they're still available, but it's something that I totally stay away from is the DP policies. You know, they're broad form policies that only cover certain types of losses, and they have many exclusions. So those type of policies are offered. For example, when an insured has lots of losses, they'll exclude theft, for example. So the answer is yes. There are policies out there that that are different from an HO3. However, those are much they're limited policies. So the best policy is the HO3 policy. So you kind of want to stay away from anything that's not an HO3. That would
Oh,
be my advice.
so there could be a possibility that, let's say they call you, they get a quote from you, and then they call a different broker or a company, and then they get a quote from them. They're like, oh, this other place is a few $100 cheaper. Let me go with them. So there is a possibility that they might be quoting them like a different policy.
Yeah, a DP 1, 2, or 3. Like I said, I try to stay away from those with farmers, but I do have avenues through formals, for example, where we do offer the DP 1, 2, and 3 policies, or when we broker it outside of farmers. Sometimes those policies require that you include endorsements on there because they're limited in coverage. So on an HO3 policy, it comes as a package, right? But on a DP policy, it just includes, let's say, the dwelling coverage for fire. But then you add the vandalism, the malicious mischief, or other structures. So there's certain endorsements that you add, but a lot of customers, if they don't see their policy, they can say, "Well, you know what? I didn't know that this was a DP policy and it excluded theft. I didn't know that my separate structure that I have, my separate garage isn't insured." So that's or vandalism and malicious mischief. That's a big one.
So going back to that, so the HO3 is the standard policy that most homeowners have, right? But if you want to save some money, let's say you don't have personal belongings that you care about or whatever, then you could get a different type of policy that's maybe less and it doesn't cover personal items and stuff like that.
That's correct. Yeah.
Oh, okay. I didn't know that. Good to know. Okay. And then earlier you said separate structures that are covered usually with the HO3 coverage. So does that include like ADUs and granny flats as well, and garages?
Garages, the answer is yes. Granny flats, we want to add special endorsements for the granny flat because it will be insured. But I had a situation where the separate structure is normally a percentage of the dwelling coverage. So let's say, I'm just going to throw out a number. Separate structure was at 60,000, but the granny flat was worth about 120,000. So, you're only going to recuperate 60,000 from that 120,000 granny flat. So we definitely want to add an endorsement for the granny flat to make sure that we're insuring it for that full amount.
Got it.
So,
Okay.
so a garage is a separate structure. A granny flat is a separate structure, but we want to make sure that those separate structures are classified correctly and that we're insuring them correctly.
Got it. Okay. So it almost sounds like if anyone's buying a house, they should probably have a conversation with their insurance agent and say, this is the type of house that I'm buying. This is what it does, what it doesn't have. And then that way they get the right coverage, right?
Absolutely. And you know what? Since you're touching base on separate structures, it's really important to understand that if you buy a home that's a multiple home on a parcel of land, right? A 2-unit.
Uh-huh.
I could insure a duplex that's connected under one policy, right? But if you have 2 separate units, then you should have 2 separate policies. So if you have an insurance company that's you just bought the property and they're insuring you one policy for both units and both units are separate, you might be you're more than likely you're underinsuring yourself because when you buy a property and it's 2 separate units, you should have 2 separate policies.
I didn't know that. I have a property like that, and now I have to go and check to see if I'm.
Now with commercial policies, it's a little different. So if you have a commercial policy, that you could have one commercial policy, but it includes both locations on the one policy.
Okay. And commercial doesn't necessarily mean like commercial real estate or
commercial. Yeah. It would be a habitational type of commercial policy where you're a real estate investor and you have multiple properties. So you're deemed as a business person. So we would do commercial policies for that.
Oh, okay.
That type of exposure.
Cool. All right. By the way, if anyone has any questions at any time, feel free to chime in. I saw Marco Alvarez just jumped in too. Um, okay. So now that we kind of have an idea of like the standard policy, and then earlier you touched on a condo or a townhome. Is there anything that a realtor on here or a homeowner on here should know about condos or townhome policies?
Absolutely. You want to know if the homeowners association, the master policy, what it covers, so that you could be able to advise your customer what type of policy he should be looking for. That's really important because some HOAs will cover not only the dwelling, the structure, but the walls in as well. So then you would purchase an HO6 policy that would cover, of course, your personal belongings, your liability, but you would only cover yourself for tenant betterments and improvements. The majority of homeowners association policies, though, cover the structure, but they don't cover the walls in. So you want to make sure that when you purchase an HO6 policy, you're at that point you are covering the walls in, which is the floors, walls, the fixtures, cabinets, and all that. I call it the studs in.
So it sounds to me again, because I mean, my experience from selling a bunch of properties is that the homeowner or the new buyer, last minute, day before, 2 days before, they reach out to either their insurer or their lender reaches out to the insurance company on their behalf and saying, hey, we need a policy for this property. And usually the insurance company just sends it over real quick. Everything's super fast and they have coverage. So it sounds to me like if the buyer spends a little bit of time up front during the escrow process and calls, let's say, you and says, this is what I have. It's a condo. This is a copy of the insurance of the association and what they cover.
Right.
What do you recommend? So it sounds like almost they should spend more time than they normally do, right? In seeing what type of policy they should get, because they could sell. I mean, I'm smelling money. I'm smelling like there's potential to save money by not being overinsured. Is that accurate?
Extremely accurate, and to make sure that you're properly insured, because there's insurance companies out there that say, oh, I'm sorry, you're not in the right policy. We don't cover this, or we're not going to cover this. And it's important to have the correct policy. I did a quote the other day for a home purchase, and the lady says, you know what? I own a condo. Do you mind taking a look at my policy? Well, lo and behold, she had an HO3 policy. Mm-hmm. And it was a condo. She needed an HO6 policy. I was also able to uncover, all she did was send me the certificate of insurance, the Master Association's policy, and I was able to see that all she needed was tenant betterments and improvements. So she was way overinsured and paying more than what she should. She was definitely not in the right policy.
Yeah, and all that adds up, right? Because even if it's like, I don't know, $20 a month that they're overpaying or whatever, but after owning the property for 10 years or whatever, that's money. That's extra cash flow they could have had or whatnot, right?
Exactly.
Okay, cool. So we covered flood and fire, earth movement coverage, and wear and tear. So you kind of, talked about it briefly, but just to make sure, if you own, let's say, an investment property, there isn't any insurance that covers wear and tear for whatever, like, the roof or the flooring or the doors or the paint or any part of the house. I'm
always careful with saying, or sounding like an adjuster, right? But based on my experience and based on the conversations I've had with underwriting adjusters and the policy backs, wear and tear is not covered. That's something that normally won't be covered in a policy. I've never seen it.
Got it. Okay, so thanks for just confirming that. One thing that I'm always fascinated that you've taught me is that your homeowner's insurance policy and your renter's policy, that they cover personal items. Even if, because I mean, whenever I hear that, I go, okay, well, if someone breaks into my house, steals a bunch of stuff, then that's personal items that may be covered. But what you taught me is that even if it's in your car gets broken into, they take your laptop, that's not covered by your car insurance, it's covered by your homeowner's policy.
Right.
Or
100%.
Yeah. Okay. Anything you want to touch on that, or any story you have?
Yeah.
Any anecdote on that?
Well, and keep in mind, unless you have that DP policy that excludes theft. So if you have a DP policy that excludes theft, so you're thinking, oh, you know what, Ray told me that I'm covered for theft on my homeowner's policy. No, it depends on the type of policy. So the HO3s, the majority of them, if not all of them, they do cover theft anywhere in the world, actually. So it's not only inside your car, but you know how when you go to a storage facility and they want you to buy insurance at the storage facility, if you have all your stuff in there or stuff in there, your homeowner's policy covers. The only the only thing though that I tell customers is that be careful, because your deductible also applies. So if you're putting $1,000 worth of stuff in your car or in storage, or you went to Africa and you took $1,000 worth of stuff and it got stolen, but your deductible is $1,000, then there's no claim. So the answer, yes, it's covered, but remember your deductible as well.
Got it. So
that's important.
So you said like Africa. So if you go to Mexico and you have a $5,000 Louis Vuitton purse and it gets stolen. So with your homeowner's coverage or your renter's policy, you could call in and say, hey, look it, I want to file a claim. I lost my $5,000 purse, and you pay your $1,000 deductible or whatever your deductible is, and then it gets covered. Is that how it works?
They're going to ask you for a police report. You file a police report. Normally when there's theft, they do ask for that police report. You file a police report. You wanted me to give an example. I personally bought an iPhone, and at that time I think I spent like $750 for the iPhone. My deductible on my renter's policy was $250. It was stolen from the doctor's office. I recuperated $500 back from that phone. All I did was file a police report. I did have a receipt that I purchased it. So that's also important that you save receipts, that you take pictures of your items in case there is a claim. You say, hey, look, I have it right here.
Well, that's pretty cool. And then the other part question to that is, we've been talking about theft, but what if it isn't theft? What if you went swimming and your phone was in your pocket, or I don't know, something else where something, your, again, purse gets damaged somewhere. Is that also covered, or is it just theft?
It would be only a covered peril. So that's not, you going into the pool and your phone getting damaged. That's not something that would be covered. That's more of,
Yeah. Okay. All right. Well,
you know what I mean? I mean, yeah. That's a great question. I get that question all the time, and yeah, no. It would be a covered peril. I mean, if your house catches on fire, that's a covered peril. Theft is a covered peril, but you going into the pool with your phone, no.
All right, good. Let's talk about what if a dog bites you? So let's say you're a homeowner, you just bought a house, you have a nice pit bull, Rottweiler, or whatever, and someone comes to visit you or someone else where you live, and they get bitten. Is that covered?
It's covered. However, insurance companies are getting pretty smart about excluding a pit bull, for example. I don't remember if a Rottweiler, but I can tell you pit bull is definitely excluded. So if there's a claim against you for a dog bite, I've seen farmers cover those claims all day long. But then, they want to know, well, did you tell them that you had a dog, when you first purchased the policy? Did the agent ask you? But sometimes, a lot of times, customers don't tell us if they have dog. Even if they ask us, say, no, I don't have dog. And they might have a dog 6 months down the road, a year later, 2 years later. And it's a really delicate subject, but the answer is yes, it'll be covered. More than likely, they're going to boot you out if you have a pit bull, or ask you to sign an exclusion form where they wouldn't cover next time come around.
Gotcha. So an HO3 standard policy does cover stuff like dog bites and et cetera.
Yeah, but you want to make sure that you let us know.
Yeah. So it's always good to check in, like have a relationship with you. And I was checking like, hey, I just got a new dog. I just have a new baby. I just have like whatever is going on in your life. Is that kind of how it works? Or
yeah, I added 200 square feet to my house. I added a second floor. All that's important. I just bought my wife a $15,000 wedding ring. I want to insure it. Or is it insured? Oh, well, it's only $1,000 per item, $5,000 max on your policy. So the answer is no, that ring's not properly insured. We need to add a floater. So yeah, definitely. Those are things you want to inform your agent.
Extra coverage.
And the floater is an extension of coverage for that specific ring.
Oh, okay. All right. So it seems like almost like I never thought of it like this, but like an insurance person is someone that you should probably have a good relationship with and check in maybe once a year or something and update them on your life.
Right. Well, I'll be honest with you. We try to get to as many people as we can. We call it financial farmers friendly reviews. Sorry, which is like what a financial planner would do. They would go over all your assets and your investments and whatnot, which they're required to do, right? To do those reviews. Well, farmers ask us to do those reviews at least once a year, and we try to do it, but we sometimes can't touch base with everybody. So we do recommend that the insured, if they do get a notice saying, hey, contact your farmer's agent, that they call us. We're always happy to sit down and review the policy. I did that today with the customer, and that's how I sold the earthquake policy.
Voltaire, if I can interject here.
Of course.
There's something that I'd really like Ray to talk about. Right now it's a hot market in the real estate business. I know the rates are very low and there's a lot of buyers out there and they're fighting for properties. And obviously the pricing is important. And I think it's important as well too to know a little bit on the insurance aspect as when you're actually selecting a property that you like. Obviously you look at all, it's a beautiful home, it's a great area and all that stuff. But there's some things that we should consider as well too, if we want to make sure that we're insuring the right way. Adding special endorsements, right? For example, for older properties, obviously the pipes and all that are a little bit more worn down, where there could be more risk in a water leak or something like that, and from that comes the mold. So those are the things that we like to take a look at, when they're older properties. Ray, I don't know if you can shed some light on that, when depending on the type of property that we might have to add endorsements to the policy as well.
Yeah, so that's a good point, because I do sell a lot of older homes. I mean, most homes in San Diego are built, before 1970. So what you're saying is, usually the home inspector tells our clients, I recommend that you do a scope of the sewer lines because they're cast iron. And cast iron over time, they get smaller and smaller, and sometimes they have cracks because roots get in them, right? So would that be something that could be covered, or an extra endorsement could cover?
Well, the answer is yes, where we could add where the backup is coming from. Many companies won't insure you if it's a water backup coming from the street, for example. So we would add an endorsement if the type of water backup didn't happen in your parcel of land, right? The pipes that are connected to your home. So that type of endorsement can be added to the policy. The actual coverage of the pipes, most companies are going to exclude the actual pipe, and most companies are going to exclude mold, for example. But we could add an endorsement for that will insure you. The minimum is 5,000, the maximum is 10,000, but at least you have some mold coverage in the policy. So there are endorsements that we could add that'll definitely help insure those older homes better.
So you're saying that the pipes themselves for the contractor to redo the pipes aren't covered, but the damage that the water would make or the sewage would make is covered.
Correct.
Ah.
Correct. The pipe itself isn't covered, but yes, if a pipe breaks and causes all sorts of water damage, I mean, I've seen claims 70, 80 grand, 100 grand just for water damage, water pipe, that broke in the home, and that's huge. That's huge.
That's good. That's good to know. Cool. So now let's move on to, and if anyone has any questions, I think I see, okay, so I have a comment. Don't take any expensive items on a trip. That's my recommendation.
I agree.
Yeah. Or you just leave them at home and they might get stolen at home. So
yeah, that's also true. Yeah, we've seen it. Hey, I'm like Dr. Burke. I've seen it all. We've covered it.
All right. So then we have a question. A gas leak that HOA won't cover. Is that something that a standard HO3 policy would cover?
A gas leak. See, you have to think of insurance in the sense of the damage that it causes. So what damage would a gas leak cause to the actual structure? You see what I'm saying? That's so, it's different than water. If a water line breaks from your, your water heater, or your air conditioner, or a pipe underneath the home or whatnot, that causes damage to the structure. But that type of leak, where would it cause damage?
Got it.
You see what I'm saying?
Yeah. It won't cause any damage unless there's like a fire that ignites or.
That's a good point. Yes, if a fire ignites and now it causes fire, then it's burning your structure. Yeah, that's something that would be definitely covered.
What about
electrical damage?
What about like carbon monoxide or some type of poisoning like that? Would that cover like the liability? Was there liability coverage for stuff like that?
On the landlord for yourself?
Yeah.
The owner, most policies aren't geared to cover the owner unless it's a landlord protector, where it becomes a bodily injury to your tenant or even to your guests if they come in. If it's something that was neglected, that you didn't cause it on purpose, but that would be a bodily injury that's caused, something like that should be covered. Yes.
Okay, gotcha. So we'll transition to the landlord protector. So for those of us who own real estate or want to own real estate, and we have tenants, whether it's one tenant or multiple tenants, and I'm sure from your experience, you probably see somebody buy their single family home, they live in it for several years, then they move out, they get stationed somewhere else out of the country or whatever, and they keep the same insurance policy. But they rent the property out to tenants. So what's the difference between the HO3 policy and then that they would have had and kept, to where if they reached out to you and they said, hey, Ray, I'm leaving my house, I'm going to put some tenants in here, what do you recommend? So yeah, go ahead.
The landlord protector. if you leave it the way you have it as an HO3 owner-occupied policy, you run the risk of not being protected, for example, lost rents and tenant liability. Those are the two big ones in my mind. So, you know, the landlord protector protects you from lost rents and the tenant liability. If a tenant gets injured on your property for whatever, you know, negligence, you know, the carbon monoxide that you should have, you know, put the alarms, or that you came to fix something in the property, you left, you know, a piece of wood with a nail, they step on it, you know, that's something, and it's happened. I've seen that claim before, actually, and they don't have a landlord protector policy, and now they're trying to sue you. Well, your insurance, if you have an HO3 owner occupied, isn't going to cover you for that. Or the kitchen starts on fire, and now your tenant has to move out for 2 or 3 months while you're repairing the kitchen. You're not going to charge them rent, but guess what? You're losing rent money. So you're not going to be protected if you have an HO3 policy from that lost rents for the 3 months. So it's really important to have the right policy so that you could be able to have the right coverage.
Got it. So it's almost, you know, the higher the risk, the higher the reward. So there's a lot of people on this phone call that own real estate, and they want to invest in real estate. And part of that is taking on higher risk because now you have tenants. So, and it sounds almost scary to do, because now, let's say talking to you and you're telling us about your some stuff that you've seen before where tenants get injured, and regardless whether, you know, you're to blame or not, either way they could go ahead and, you know, potentially try to sue you, and then you got to make sure you have the right coverage.
And I'm not going to talk bad about lawyers, because that's the last thing that I want to do. Lawyers, they're going to come after you. You know, that's what they do. The tenant's going to hire a lawyer, and he's going to come after all your assets. Or, you know, if there was only $100,000, or let's just say if there was only $25,000 worth of harm that it caused, they're going to come after you for $1 million. And I've seen it, they do. But that's why you have an insurance company, because the policies are geared to protect you, the owner. You know, in saying, okay, well, it's a valid claim. We're going to pay it out. But if it's not a valid claim, we're going to defend you as well. And if the lawyer's trying to get $1 million and we can negotiate for 100,000, they're going to negotiate for 100,000. That's very important.
Okay, good to know. Let's talk about a little bit about, you touched on it earlier. Well, actually, before we go into the coronavirus discussion, let's bring in another type of insurance. So car insurance. Does car insurance, I know obviously everyone here does real estate or owns real estate or is involved in real estate, that's why they're here, but does having the right car insurance coverage matter to someone who owns real estate?
Absolutely. I mean, if definitely yes, because it's another liability. You know, if you hit somebody and you cause bodily injury and you only have the limited liability limits, which California requires, which is 15,000 limit per person, 30,000 max per accident, and 5,000 for property damage. And here, and that's what you have, and you own real estate. Well, you know, if you hit, let's just go with the property damage. If you hit a 2020 Mercedes 5 Series, right? I mean, $5,000 might not even cover the bumper. You know, so you want to make sure that you have enough coverage to cover whatever property damage, or if you cause a 3-4 car accident, which it happens. I just had that the other day. It was a 4-car accident. Our insured hit somebody and it trickled over and caused another 3 vehicles to be damaged. One of them had bodily injury. So you want to make sure that and that you have that coverage to cover, you know, expenses. You might even look at an umbrella, you know. So yeah, no, you want to protect your assets, and in order to protect your assets, you want to make sure that you have the right limits for liability on your auto insurance.
Yeah.
Actually, and also, for example, one good example that I do when we go out and to the properties and insure, the clients with the policy is, the liability aspect on both sides, on the home, and on the auto, is extremely important, especially if you have, real estate assets, because what insurance does is it's going to protect all your assets. So if you have like a gap in your insurance coverage, for example, in your auto liability, and say, like the minimum liability coverage in bodily injury is $15,000 per person. Well, let's say if you cause a really bad accident and it's an old lady who, is very weak in health, and she has to go to the hospital and, do, internal bleeding. I mean, these hospital bills, we've seen them, it's hundreds of thousands of dollars now. So what's going to happen, you're going to be at fault, you're going to go to court, and, if you don't have the money out of your bank account, then they'll start putting liens on your properties or actually making them sell. So, that's why it's important to have the right coverage on auto, on the home, and just like Ray said, the umbrella as well too.
Yeah, that's an excellent point. I was thinking about this while you guys were talking, and it's like, guys, everybody on this call, we work too hard, year after year to build up our real estate portfolio, to buy our first home, our second home, third home, to, for whatever reason, in the blink of an eye, have to lose it all because we're not properly covered with insurance. So I recommend everyone on this call, get with your insurance guy. Make sure that your car insurance has, proper coverage, that you're not paying these commercials you hear on Z90 or 93.3 where it's like, $80 a month or whatever the heck they're charging. That might be the California minimum. But if you get into an accident and you have assets, you have houses, you have money in the bank, you have stocks, whatever you have, in a blink of an eye, all that could be gone. 10 years, 15 years, 20 years of hard work could be gone because you're not properly covered. So that's an excellent point. And if it's not you, there's a lot of real estate agents on this call. Get with your clients. You should introduce them to guys like Ray and Marco, who can sit down, look at their overall, I guess, not portfolio, but just overall assets or financial being, and say, hey, there's liability here, you're undercovered over there, just get this additional coverage or this type of policy, and that way you're covered and it's worth it at the end, right?
And it's just ask yourself, how much am I worth? Do I have $1 million worth of assets? Do I have 2 million, 5 million? How much can I lose? And that's where you start thinking of coverages. Do I have the right coverages? Yeah,
that's important. So that's good to know. Any questions so far? Because I'm going to ask Ray to just talk a little bit about
the most delicate question.
Hey,
when I don't know. But when I don't know, no.
What's up, Ozzy?
Hey, what's up, guys? Have a question. I'm helping a family right now. They're going to become tenants for the very first time, and they currently own a condo, and they're transitioning to a house, and they're going to rent out their condo. Do you recommend having what's it called, the home warranty, and then also the an additional insurance for tenants, just to be on the safe side? So two type of coverages, one for the home, and then I mean the real estate home warranty and the regular insurance for tenants.
So Ray, in real estate, whenever we close a transaction, most buyers get something called the home warranty insurance coverage. So if you're familiar with it, then you can go ahead and answer Ozzy's question. I just want to let everybody know what Ozzy's referring to when he says home warranty.
Right. Definitely, I always recommend the home warranty. We personally don't sell the home warranty policies, but we always like when those home warranty policies are offered on behalf of the real estate agents because it's an additional coverage in case something happens. In other words, the inspection wasn't done properly or whatever, and then now we have an issue where maybe the insurance isn't going to cover because it might be a wear and tear. We've seen those, and the home warranty then comes in, and it's covered through the home warranty. So Ozzy, definitely yes, the home warranty. I always recommend that you guys offer it 100% of the time, and then for the condo that they're going to rent out, we definitely recommend that they because I'm assuming they used to live in the condo, now they're moving out, right?
Yes, correct.
Yeah. So then they probably have an owner-occupied policy where now they want to switch it over to like what we offer an HO6 policy, condo rented to others. So that's a non-owner occupied. So definitely we recommend that they switch over the policy, but we also recommend 110% to have the tenants purchase renter's insurance as well.
Okay.
That's extremely important for them as owners, because keep in mind that if something happens, God, I hate the fire thingy that the place catches on fire. Well, the tenants aren't going to be protected for their personal belongings or loss of use. Loss of use is, say the owner says, well, you know what? I can't pay for your hotel meal expenses. You need to leave because the kitchen, part of the room always, it's inhabitable. But I'm not going to charge you rent. So now the tenant is without a place to live for one day or the other. And I've seen it. If they have a renter's policy, they're protected for their personal belongings, and their policy will pay for hotel meal expenses. And then your customer's policy will pay for the lost rents. So that's extremely important to have.
Is a rental insurance, I mean, the tenant's insurance, is that expensive? Is that something that the tenants would pay, right? And is that expensive?
It could be anywhere between, depending on the type of coverage, it could be as low as $10, as high as $20, $25 per month. But I want to also touch base on the liability portion. If the renters purchase their renter's policy and they cause a liability, their policy would be first. Where if somebody comes into the property, one of their guests, and because of their negligence, it causes a liability, and hurts the person that walked into their home, then their policy is going to kick in. And I'll give you the prime example, the dog. So the tenant has a dog, and they don't have renter's insurance, and the tenant bites one of the guests that come into their home. Well, guess who they're going to come after?
Bites one of the cats, or the dog of the tenant's bites?
Yeah, the tenant's dog bites. Yeah, bites one of the guests, right, that come in, and so the tenant doesn't have a renter's policy, right? So who are they going to go after? Yeah. They're going to say, well, the lawyers are pretty savvy. They're going to go after the owner. They're going to say, okay, well, you were negligent because you didn't ask your tenant to purchase renter's insurance, so we're going to go after you.
So what happens, Ray? So Ozzy, that's a great question you bring up with the renter's insurance, because on all our rentals that we rent for our own portfolio or for our clients, part of the contract with the tenant, part of their lease says that they have to carry a renter's policy at all times. So the next, and that way their policy could kick in first, right? If there's some issues.
Exactly.
So, but the other issue on hand is, what if they don't renew it after the first year? Because tenants forget, they get mail, they just don't renew it. And what happens if there's an issue there? Do they go after the tenants because the landlord's going to show them the contract, the 1 year, the agreement that says that the tenant agrees to always have coverage. So do they still go after the owner, or is it on the tenants at that point?
That's a great question. And this is the one question where I'm going to say it's hard to answer that one because, I know I've mentioned the word lawyers twice already. That would be a good legal question. They're still going to go after the owner. But the owner's going to come back and try to use the contract as recourse to go after the tenant.
Yeah.
Of course, right?
So like if Ozzy, for your clients, you have to tell them, hey, you need to get renter's policy when you rent this thing out, and you have to stay on top of the tenants on a yearly basis to make sure that they provide updated insurance coverage for as long as they rent out the property. And that now I'm like thinking about the properties that we manage, and I know Soraya's on here. I don't know if Soraya, if you have something on your calendar that just tells you, once a year to follow up with tenants at different properties, asking them for an updated copy of their renter's coverage or not.
Voltaire, and if I can just interject one more time as well too, it's like the banks as well too with the homeowners insurance as well too. They request it every year, and that might be a good strategy for your clients or you guys yourselves who have a real estate portfolio. Make sure that your tenants have a rental policy as well too. And going back to Ozzy's, sorry about my daughter, she's running me cry, but to Ozzy's question about should the tenants have a rental policy, absolutely, because if it's HO6, on these master policies, their insurance is very high, their premium. They're talking about covering hundreds of units. So what they do is they run high deductibles, right? They could be as high as $30,000, $50,000, $100,000 deductibles. So what they like to do is, have they'll cover it, but then they'll say, okay, because you caused the accident or it was in your unit, you got to cover the deductible. So with the HO6 policy, covers the deductible, and if your tenant is living in the property, well, their renter's insurance will cover that deductible as well too. That's part of the liability portion.
Correct.
Yeah, that's pretty good. So name of the game is always, be covered. As simple as that. So
the sequence, guys, would be HO6 policy for my client, and then request for any tenants that they decide to rent out their place to have their renter's insurance, right?
Right. And then,
and
yes,
it should be specific.
Yes.
Sorry, Ray. It should be specific that it's not just an HO6 policy, but it's an HO6 policy rented to others, right? It's important that we cover that liability exposure that is different from just owner-occupied HO6.
And if I may, just touch base, because I've seen Soraya's notes in the bottom. If you're added as an additional insured, that's very, very important, because Soraya, correct me if I'm wrong, I've never been on that end. Do you get the notices? I think you get the notices if a policy is going to cancel, correct?
Hi, Ray. Yes.
Hi.
So if the property is about to expire, we do get a notice.
There you go. Yeah.
And it will tell us that the policy is about to expire. And if it does expire, we do get a notice from the insurance company. And if it is renewed, we also get a notice. But from the very beginning, we always make sure that we are added as additional insured, and with our address and everything. That way we get notified if there's any changes.
And that's what I thought. I just never been on that end, but yeah. Ozzy, make sure that the owners are added as additional insured on that renter's policy. And you know what?
Yeah, and that they have your information, the owner's info, like an address, a different address besides the rental property. that way the notices go to you, to the owner or to you, Aussie. And if they don't pay for the policy, you get notified immediately.
Gotcha. Okay.
Well, that's good. Good advice there. We had a question as well from Edgar.
Hey Ray, hey Wolf here. My question is completely different. It's more on neighbors. Are there any policies to protect you against your neighbors in case there's kids and they get injured, or maybe they're just doing damage to your property?
The answer is there's no specific policy that you have. It goes back to, okay, so the neighbor's kids cause damage to your property, so you're going to go after them with their insurance policy. Their liability portion, if they have an insurance policy, a homeowner's policy, then the answer, if those kids cause damage to your property, you're going to go after them. But just think about the commercial where the guy's cutting the tree, because same concept. The guy's cutting the tree and it falls on the neighbor's car, right? So your car policy will cover your car, but you got to pay your deductible. But why not go after the homeowner that caused the damage on their insurance policy, and that'll save you your deductible. So if the kids cause damage to your property, you could use your insurance, but it's gonna, if you have a deductible on your home, which most policies, all policies have it, you're gonna have, if it's $3,000 worth of damage, your deductible is $1,000, you're only gonna recuperate $1,000. Who's gonna pay you the other $1,000? Well,
Gotcha.
you know.
So
do deductibles tend to go up just like car deductibles go up after like the first incident?
That's a good question. Normally your deductible won't go up unless your agent or the company changes it per your request. I think there might be companies out there where there's diminishing deductibles or increased deductibles depending on the accident. Farmers isn't one of those. If your deductible is $500 and you have an accident, we're not going to raise your deductible to $1,000 because you had that accident, unless you ask us to.
I see. If I may, I have a second question, and that's you mentioned something about renter's insurance in case the renter can't pay the rent for 3 months. The home insurance could pay the homeowner for those 3 months?
Correct. It's called loss of rents. So if you have a landlord protector, your policy will pay up to 12 months worth of lost rent. And so it's important for you to have the lease agreement. So if there is a loss, your tenant needs to move out for 3 months. And if it's a covered loss, like fire, I always use the kitchen. I don't know why. But your insurance policy will cover you for those 3 months.
Is that something you could make mandatory for tenants given COVID instability and concerns of people keeping their jobs?
Well, I don't know if I understood the question, but you having the landlord protector policy is something that you would have, but something that you would make mandatory, just like Voltaire and Soraya do, is that when they rent out a property, that they have to have the renter's policy, and that's something that's mandatory based on the lease agreement.
yeah, so I think I get Edgar's question. So the
Yeah.
loss of rents, it's only, so the loss of rent coverage to where farmers, for example, would pay you the lost rents that you lost would be part of the landlord protector's policy that the
Correct.
homeowner has, not the tenant. So if there's a fire in your kitchen and you have to, move out for 3 months for you to fix the kitchen, the landlord protector's policy would kick in and the loss of rent.
Correct.
Receive rent. Yeah.
I think what Edgar was asking is if maybe it's just if the tenant is having like a financial hardship, if the insurance would kick in, and no, it
Yes.
wouldn't kick in there. It would be more it would kick in more when there's a covered loss.
Okay.
Okay, based
And
on
I think I maybe, yeah, and sorry to interrupt. Yeah, and you mentioned the word COVID. This one's a very delicate. So the tenant, I think I get the question. The tenant can't pay the rent, right, for 2 or 3 months. So I think, will the insurance, the landlord protector, protect you from that? I don't no, I don't think so. But things are changing and everything is different with COVID. But yeah, no, it wouldn't protect you from that type of lost rents.
Okay. No, I think it makes sense and it's pretty clear based on how he does cover and how he doesn't cover.
Right.
All right, thank you.
That's a good, I get the question. I don't think I understood it in the beginning, but now I think I do.
Question. Yeah, thanks for that question, Edgar. Cool. We're already over an hour. But any last final thoughts on anything at all that we maybe didn't cover, or COVID or anything like that, Ray, that you want to leave us with?
No, I think we covered a whole bunch. I mean, right now, the COVID question is probably one of the most delicate questions that there is. These past couple days, I've been trying to read the policy backs to see what it could include, what it excludes, and stuff like that. And I really haven't seen anything in regards to viruses. Now, commercial business policies do have exclusions to viruses, believe it or not. So if you're a restaurant owner, and you know, you're looking for coverage because of COVID, most insurance policies have that exclusion. But we're in a delicate situation. They're delicate questions with, you know, somewhat of delicate answers. I don't know.
Cool. Well, you know, thanks a lot for your time, Ray and Marco, tonight. I know it's a late night. I think we could all learn that, you know, our whole thing is always retirement. We're always talking about just creating net worth for yourself, assets, and one day retiring and building a nest egg and all these great things. And part of that, we have to create a team, right? We've talked in the past about creating a team. So you need your real estate guy, you need your loan guy, you need your financial advisor. I guess I would say somebody who's sorely overlooked in that retirement team is your insurance person. You need a really good insurance partner to look after your best interest, that we're always properly insured. And again, you just don't waste all those years of really grinding and hard work. So reach out to Ray, reach out to Marco, and that way you guys could also put them on your team, introduce them to your clients, because this is what it's about. It's about consulting. It's not just about getting the lowest quote and just, you know, it's like you got to sit down, you got to actually talk these things out. So thanks a lot, guys, for your time tonight. Ray, my pleasure. They're asking for you guys' information, so go ahead and type it in the box, and then that way everybody has your information. Yeah, thank you guys for your time. It was it's always interesting, man. I thought insurance was so boring before. I wouldn't even read my letters that I would get from y'all, but this is good stuff.
Appreciate it. No, thank you for having us.
Inviting us. Thank you.
All right, everybody. Peace out. If you guys have any questions, reach out to Ray and Marco directly. If you don't have their information, email me. I'll get you all their information. I know Ozzy's asking for it right there. There you go. 770-1903, option 1. And you could type in your email in there too. And then you guys could just take a screenshot of that.